Okay, so yesterday I mapped out the Euro USD's fundamental for next week. Economic data is slightly bearish, the COT positioning is slightly bearish, as well as the technical direction is slightly bearish. These three data are all pointing in one direction, right? And then I jumped into the 4-hour charts and there is a fresh bullish change of character right there. So the question now is, which one of these is going to have to give? Because one definitely has to. So this is the Euro USD data, right? And what we see right here stands to say the economic high impact is just below normal, just below the 50% mark. The high impact data, which is the recent 40 days, is also just below 50%. Matter of fact, it's so close to each other. The yield, this is inflation minus rates, CBN central bank rate. And for both currencies, when you compare it, the yield is more to the dollar. We have the central bank rate difference. Now, this is just the central bank rate difference. More for the dollar. The leverage funds they're slightly short in this market, but the retail traders are going long, so I'm going against them by shorting this market. And that gives me a sum product of 40.5%, putting me in a position where I'm supposed to be selling in this market currently, right? This is exactly everything that has to do with the economic data overview immediately. So this whole data is making sense. Okay, I think we're looking at the after calculation. Let's look at the real deal. What led to this calculation? We're going to start with the market check, the US dollar. And right here, what you can see is in the recent 14 days, the recent 30 days actually, because this is always timed up to 30 days, you see that all the economic data releases, they are nothing for the central bank. The employment data for the US dollar has like a good stance. The last just one bullish and neutral data. The recent CPI is mostly neutral, quite bearish on the month-over-month CPI core CPI, and the PCE is bullish. But the economic activity has lots and lots of bearish, bullish signals. But mostly recently, we've been getting some bearish, some bullish signal. Now, the COT stance, we have the asset managers going heavily long. We have the retail traders also going heavily long. But we have the leverage fund, which is the red line. And they seem to have started leaving the neutral camp. They're going quite long slowly. They are beginning to accumulate long. This is not today's COT data release, right? They will be releasing COT data releases today, and we'll put that up and get that one. Now, when you look at it in the recent 14 days compared to the overall data, you see it's not so far away from the recent 14 days. And everything here tends to tell you we're about 55%-ish strong for the dollar, meaning dollar is slightly bullish and still yearning to become bullish over time. Then we have the opposition, right? The euro. The opposition, on the other hand, is bearish and slightly becoming more bearish, with the only standing data here being the economic activity. But even the economic activity, as you can see right here, came out with heavy bearish data recently. The most recent sets of data have been more bearish than normal. This is the last set of data on the 5th, and they were terrible. Not really bad, but they just happen to not catch up real good. We have the inflation data, the employment data, and then we have the COT stance. Now, the leveraged fund traders didn't move much last week. They didn't move much to the upside. They moved, but they tried. We have the retail traders moving harder, and we have the assets managers not so much as bullish as they are in the US dollar. So this is the whole fundamental stance of the market. Well, as you can see right here, everything really is actually leaning more for the dollar in this stance. Now let's go to the chart. So this is the daily chart of the market. Now I'm going to just turn on something about something like CHoCH, a CHoCH indicator I have here. Now this CHoCH indicator tells me it draws a triangle where I see a change of character, and also tells me the total volume traded within that triangular space. So we can agree now that this zone where price made this pullback, pull down, was the change of character on the daily time frame. Yes, it's been debated multiple times, but price hasn't made a second change of character to continue to the downside. When that is going to happen is when we see definitive breakdown below the lows of this is 1.141. Then we start to see the continuation to the downside. But however, price is already showing us heavy signs of continuation to the downside. Now, what was my scare when I opened this chart on the 4 hours? Well, The last break of character, change of structure I saw was to the downside. Now, on the 4 hours, tell me why I am seeing this change of character to the upside, especially when we are so close to a daily supply zone. Well, this is the thing. A lot of people, and they see this CHoCH, oh, the market is about to go long, it's going to go hard and all that stuff. I don't think so, personally.
Now, as always, this is not financial advice. This is just me running you through my opinion and why I think that opinion is very, very valuable. So without further ado, let's just head right into it.
I don't think so. And why don't I think so? Well, this is it. I may be wrong, as I am human, but for this supply zone to hold, price has to find a way back into it somehow, right? Let's zoom into this. I'm just going to put this a little bit down. Yeah. So for this supply zone to hold, price has to find a way into it somehow before it can continue to the downside, right? That is one perspective. Mind you, we only wicked into the weekly supply zone. We never touched the daily supply zone. As you can see here, this is the daily supply zone up here, this right here. We never actually came back to touch this. We just wicked into the weekly and we ran off with it. You can see it. This is the weekly supply zone right here, as you can see. And this weekly supply zone stood very, very well. Price went below it, came in and shut off immediately. Mind you, this is where you need to be careful. Most people are going to see this fair value gap or imbalance here and say, oh, price was just reacting off the imbalance, which, yes, price really did react off the imbalance. As you can see, you did the proper sharp turn over there. Price going in, coming out, fair value gap in, fair value gap out. And we did see a very, very sudden reaction to it, which is a good one. However, fundamental is still majorly bearish based on my calculation, right? It's my personal calculation. I may be wrong, I may be right, but my personal calculation says fundamental is still heavily bearish. So what I am personally looking out for is this. So I'm looking out for price to make its way into the supply zone in the 1 hour. As you can see, I also have that 1 hour CHoCH here. Change of character. I keep calling it CHoCH, change, whatever it is. But when I have that change of character to the upside, I am hoping for price to find its way, especially into zones like this. You see this one right here, this area. This area has, to me, much more definitive move than necessary. But however, if this fails, we also have this upside right here that may be where price would finally take the fall. But all of this, again, still strongly depends on fundamental remaining bearish. If for any reason whatsoever, we start to see bullish markets fundamentals, right? We start to see bullish fundamental stance, the market might do the exact opposite. Now, let's take a look at that. That is for the euro US dollar. But I want to show you some other currency that actually has something real good going for it. We're going to go back to the impact table, and we're going to go just specifically for the values of majors only, right? We're going to go for majors only. I'm going to take out this filter, and then we're going to look at the majors, right? We have the US dollar against the Canadian dollar being strongly, not the strong bullish, right? It's slightly bullish, but it is the best performing among every single thing here. Now, being the best performing, let's take a good look at what's happening. We have the overall data being good, with the technical data heavily bullish. The recent 14 days, somewhere around the mid-range, kind of negative a little bit. But we also have the central bank rates. When you take out the central bank rates differences, there is much more power to the upside, meaning the dollar has a better stance to the CAD. And then we have leverage funds going long, more for the dollar than for the Canadian dollar. And we have the retail traders trying to short this market, meaning this is a market you should be buying into, for sure, right? Or maybe I should be buying into. Again, it's not financial advice. So we're going to stand up from the daily, and we're going to go straight to the US dollar against the Canadian dollar. And what you see right here on the daily is a very, very strong uptrend. Now, for me personally, I love this whole setup for one reason. I want price to move so much that it breaks above the weekly supply zone, which it's trying to do. Not it has done it yet, but it's trying to do. And what am I waiting for? Well, I'm waiting for any good pullback into any good demand zones available. So if it creates a new demand zone, I'm going to put a new table there, a new view over there. And I'm waiting for price to pull back into those demand areas. Now, mind you, there is this saying that the rectangles you draw on the chart doesn't matter. It doesn't matter to the market. It matters to you. Don't forget this. The triangles or the rectangles or the squares or whatever it is you draw on the chart, the lines, the arrows, it's an indication for you to always remember what you're looking at the chart. It is not for the market to respect. It is specifically for you as the person trading the market to, whenever you open this chart on the phone, on the device, on the laptop, name it, right? You remember exactly what you were like trying to look out for. So this is what I'm saying. This triangle, this rectangle right here, this my zone, I am waiting for price to come into this area, probably around here or anywhere it does that, right? It does that pull back to this area. And if the fundamental remains bullish at that point, or even neutral and showing signs of going bullish, I'll take it as a chance to finally come into the 1 hour and search for reasons to buy into this market. As you can see, it's still giving us major 1 hour bullish change of character. This triangle here signifies a change of character. I can see we have a delta volume of plus 46,000, and price seems to want to continue to the upside, or rather people in the market wants to continue to the upside. The deals being made still continues to favor the US dollar than it favors the Canadian dollar. This is for the US dollar against the Canadian dollar. Then we have the US dollar against Swiss franc, and similar scenario here, just slightly less stronger than the US against the Canadian dollar. So let's take a look at what's that. So for the US dollar against the Swiss franc, we recently had a push to the upside. As you can see, this is a bullish change of character that we have here. Now, funny enough, I haven't even marked out this chart before. So let's do the whole thing together so you see exactly how I analyze the market personally. So first thing I'm looking out for is, well, this market directionally by the chart wise, it's a market that keeps going lower and much more lower. What is going to make me take this market serious to the upside, right? What is going to make me take this market serious to the upside? I want to see a change of character on the weekly, not on the monthly, not on the daily, not anywhere else. I want to see a change of character on the weekly. So I'm going to first look for the latest supply zone available, which is this, right? You can see right here, this is the latest weekly supply zone I have. And this is exactly how I love to label my chart. For weekly, I only need to see it all the way to the day. If this weekly supply zone gets taken out in a whole week, then I have a belief that this market is moving to the upside. However, today is Friday. This is going to be the end of the week. This week may end with a good weekly demand zone right here. So at this point, I'm in a tight area, right? I'm in a tight area where price could do anything. Price could do anything. And why do I say price can do anything? Well, if you zoom into this situation very well, this is what could possibly happen. Price could do this, right? Price could just do that immediately. Or price could end up doing something like this. Price could do this and finally break above. So those are the two things that are possible from the weekly view. Then we have the daily, which is where the fundamentals really kick in. And I want to see the same thing, a break of character, a change of structure to the upside, change of character or break of structure to the upside. And as you can see right here, I have a very strong daily change of character right here. And what does this mean for me? So what this means for me is I can start looking into this range of price. Do I have anything on the lower time frame whereby if price comes in here, I may have a reason to finally buy up to the upside? That is the first thing that comes to my head, right? One of the first things that comes to my head. if this is the daily situation of the market, and my fundamental is saying this is a bullish market, this is a market I should be looking out for. So I'm going to go into the 4 hours, which is where I love to mostly look out for the trade. And I'm seeing that the 4 hours already functioned real good. However, the 4 hours did something real nice, right? The 4 hours left behind this whole area of algo markets structure for us. This whole area is left for us to hope from price. Now, what does this mean for me? I basically have, I have right now, I have this area as structural liquidity. This is what I mean. And I have, if I should draw this out very well for you guys, I have a very beautiful POI right here. A very, very beautiful POI right here. So what does this mean for me? I have, and I'm hoping, right? I'm hoping price doesn't make a run to the, like a strong run to the upside, for one simple reason. Because it's a bias reason. I want to buy here. I'm going to buy here. Stop loss a little bit below it and aim for like 2.5-ish, around 2.5-ish, 3, if I can't, on this market. But this will only be useful to me if, right, if the market continues to the downside into this zone, so I can take it up to this area. So this is what personally I am looking for with the US dollar against the Swiss franc. Again, it's a buying trade, just like the fundamental says to buy. However, I'm not buying in with the rush at this price. This price looks way too high for me in this point. I need it to come down a little bit so it becomes a little bit cheaper, just a little bit cheaper, and then I can buy into it and move up. Mind you, the delta volume here is 67,000 plus. Let me just zoom into that so you can see I have 67,000 plus delta volume, meaning whatever happened in between this candle to this candle, the total volume positive is around 67,000. So this is what I am looking out for personally on the US dollar against the Swiss franc. We have the US dollar against Japanese yen. Now this market, I have always said one thing and one thing over and over again. This is a market that I do not want to get involved in anytime soon, because I'm not going to say it, I'm just going to breeze through it. This is the 6th time price is getting into this level. And when I went into the 4-hour chart, this is what I saw, right? I think it was the 4 hours or 1 hour, somewhere around there. Yeah, in the 4 hours, I'm seeing negative candles that look like the usual situation we usually get. And those kind of negative candles, I don't trust them. When they start to appear, another one may appear, another one will appear, and whoop, that's gone. I don't even want to look at this market at all personally. I personally feel this is a market to avoid. Why? I'm just going to breeze through it again. The market has always rejected at this zone. I'm just going to turn this off so it looks neat for you guys. So the market has always rejected in this zone. You see this parallel channel I have here? The market has come in here 1, 2, 3, 4, 5, 6 times. It has constantly rejected around this area. So I'm not going to be the next test subject for BOJ or US dollar, the Fed, to play with the little money they manage to have. I'm just going to sit here patiently, right? I'm going to sit here patiently. I'm going to wait for the market to probably break through the supply zone, this weekly supply zone, and find its way down into this weekly demand zone. So probably then, if the market is still bullish, I could then say, let's buy in a little bit. That is all for the US dollar against the yen. We have the British pound against the dollar. Now, this market is neutral to me. Very neutral, especially with the fact that it has like very confusing variance right here. The variance is very confused. We have low overall data, but However, in the recent 14 days, the data is becoming very, very strong, meaning somehow the British pound is beginning to gain energy, fundamentally, right? And then the technical direction is almost in the neutral zone. Matter of fact, it is neutral as far as we're concerned. It's not running away from the 2020 SMA. Then we have the central bank difference, which is nullified. There's a positive yield going for more pounds than the dollar. Then we have leverage fund, not so sure which direction to take. And then we also have retail traders going long in this market, meaning I should be going short against them. As you can see, there is confusion in the data available for this market. So it's a market that I'll just stay a little bit out of. But let's just do justice a little bit, and we'll go into the technical setup of those markets to just look at it. We're going to start with the daily view. So on the daily, I have price, or rather currently price is finding its way, trying to navigate through a daily supply zone. Now under this daily supply zone, if there's anything any technical trader who trades supply and demand is hoping to see, is that within the 4 or 1 hour chart, they would want to see the change of character to the downside. And personally, let's just turn that on and see if we had one back here. This is a change of character that created the daily supply zone. But here we have a bullish change of character to the upside, which is, a big scare to any big trader right now, any trader going into this market. We also have the same thing here. As you can see, market is finding its way deep into this zone. The only reasonable thing to do here is to wait for the markets to move up a little bit, and then possibly show you another change of character to the downside. Probably then you can trade this chart. But for me, I don't want to touch this with a 10-foot pole. Move on to the New Zealand dollar against US dollar. What we have here is it's a good market. Actually, this market is nicely bearish. Just the only issue is the fundamental data has more belief in the New Zealand dollar. The impact data is also neutral. The recent 14 days has been neutral, but the technical direction is still bearish. The central bank rates lies more for the dollar, right? The yield lies a little bit more for the New Zealand dollar, but the central bank rate lies definitely for the dollar. The leverage fund strongly on the dollar side, and the retail traders going against them means I should be short in this market. So personally, I should be looking for a chance to short this market for a very, very short period of time if I want to trade in here, which is basically day trading. And you all know my feelings about day trading personally. I don't really like day trading much, not because it's bad, but because I don't know how to handle it personally. So if you can handle it, good for you. Now, what's happening on the chart? We have a huge change of character to the downside. However, it's a conflicting change of character because the total volume here within this time space. When I say within this time space, I mean if you look at everything that has happened from here all the way till here, right? This little bit of time space, that is where the triangle starts and where the triangle ends. One thing you'll notice is the total volume that occurred here is still slightly bullish, even though we have a bearish change of character. So this market, yes, it says I should short. However, I want to be very, very careful what I do here. I need to be very, very careful what I do here. I need to remove these lines so you understand what I'm saying. So I need to be very, very careful what I do here, because there's one funny thing that's happening, right? On the 1 hour, I'm seeing a possible change of character to the upside already. Yep, I just knew that. So on the 1 hour, we have price coming into the weekly supply zone, into the weekly demand zone, sorry. And with price just mitigating into a weekly demand zone, there's no close weekly supply zone available to it. However, there are daily supply zones waiting for it to touch. So go back to the 4 hours. This is what I'm seeing right here. Personally, what I see on this chart is this. I've seen price do the following. Price has swept this liquidity, it has swept this low, right? Price has gone below that low, meaning they've managed to push the market somehow to the point where it has finally touched below the zone, and now it is slowly heading to go above the zone. So if that happens, we are now having a change of character to the upside, but that change of character may not last. As you can see, we've had that change of character on the lower time frame instead. We've had it take away this low and finally breaking above the high, and that change of character may not last for one reason. We have a daily supply zone here. Actually, two reasons. We have a daily supply zone here. This may not hold, but we also have a stronger daily supply zone way up here. So there are two things, right? Price may find its way into this zone before it falls down, or it may go through this, it may come in to come down and then gather the momentum to finally come up into this zone. Personally, I am not going to be opening this chart anytime soon for a while until it moves in a clear either direction. We already dealt with the euro US dollar. Now let's deal with the most bearish thing here. We have the Australian dollar against the US dollar. Now, after the long run to the upside we've seen of the Australian dollar recent times, it seems the market is clawing back a lot of it. And as you can see here, fundamentally, we have a sum product of 35.95%, which is basically at 36%, which is basically a bearish market as it is getting so close to becoming labeled as offensively bearish, right? What's happening right here? We have the fundamental data sticking to the low side, technical data pulling it down even further. But even though the recent 14 days we've been having good news from the Australian dollar side, we have yield standing more for the Australian dollar. We have central bank difference staying in more for the Australian dollar. But we have the leverage fund traders sinking the ship. And then we have retail traders trying to go long, and going against them means we should go short. Now, putting that into perspective of what the chart is showing, let's head straight to the Australian dollar, and we'll start all the way from the daily. Now, what do we see here? We have two confused situations. We have a CHoCH to the upside, change of character to the upside, and we also have a change of character to the downside. But personally, I won't lie to you, what I see here is much more reasons to just stay out of this market until one of these two things prevail. What do I mean? So a change of character to the downside naturally is supposed to push price past this level. And a change of character to the upside has to push price past this level. So you can see that we are in the middle of a chaos right here. You can clearly see that this is the middle of a chaos. If you move down to the 4 hours, why do I have this zone I was looking out for? And the only reason I'm looking out for that zone is this. On the daily, I have a supply zone sitting right here. A very, very, very good daily supply zone sitting right here. As you can see, I have another one up here, way up here, seated waiting for market to do something about it. Just like we had in the New Zealand dollar, right? If I'm going to trade this market, I'm going to be trading a buy. If I want to buy, right? If, I said it's an if, right? If I want to buy in this market, I want to buy with one single target in mind. I want to buy for, hold on. I want to buy for this level right here. But you can see it's 1 to 1.33, which is nice. It's a very, very good profit stance. However, if you lose, you're literally going to lose a lot more. Even though we've had a change of character on the low side here on the 4 hours, on the 1 hour, sorry. But what's happening on the 4 hours? On the 4 hours, I'm seeing price find it difficult, very difficult to outpace this 4 hour supply zone. Matter of fact, it got there and literally met a stop. So my only faith for this trade right now is I'm going to go down to the 15 minutes. I'm going to apply a little bit of logic. I want to see bullish order flow. The bullish order flow of bullish imbalances occurring more often. I can see the first bullish imbalance right here. I'm going to put this as a bullish imbalance so you see it, right? So I have the first bullish imbalance right here. I have another one right here. So I'm seeing bullish imbalances hold up to the point where we're able to negate opposing 15 minutes supply areas. I'm just going to have to make this a little bit bolder. Yeah. So we've been able to negate 15 minutes bearish flow in the market. So this market looks safe for me to buy into. Now, I'm not saying you should buy into this market. Take note. Again, these are trades that I personally take. It's my personal trade. It's my personal account. and I'm seeing reasons why I should be buying into a market. This is not financial advice. If you want to buy into these markets, trading is risky. Do well to do your due diligence, analyze the markets yourself too, and if you can convince yourself a reason to go along with this trade, then feel free to go along with it. But don't go out there and say I advise you to take a buy trade. I'm showing you why I may be taking a buy trade personally. And I'm looking out into the 5 minutes, and what I want to see is I want to see strength diverge into the Australian dollar. I want to see that straight divergence into the Australian dollar. I've seen all I need to see. All I want to see is positive sides, green divergence. Price shows green divergence into the Australian dollar side, and I'm buying those markets, aiming for that small move to that upside as soon as possible. So this is all when it comes to what I expect of the markets in coming times, not just today, but in coming times. This all depends on what the fundamental analysis ends up portraying for us, and then we'll have like a stance on if we'll continue with the bias or change our bias as usual. The market then to change your bias as soon as the market changes its tone. Don't wait, don't oppose, move with the market. So with this, I'd like to say thank you for watching. I hope you watched the video where I reacted to James Tillstead. It's right here if you want to understand that video. But before you move on, I'd just like to tell you that video is majorly focused on day trading, and it also has this ability to link you into higher time frame trading, which I really love. So see you all in that video. Peace.